Peter McGuire at XM joins me live in the studio this morning. Peter, great to have you on board with us. Very good morning to you. What did you make of that really strong print that came through with the jobs data in the US? I mean, I guess it really allays any fears about a slowdown in the US economy.
Well, exactly, Leanne. Good morning. You know, we really shot the ball out of the park. When you think about it, they were expecting 177. The ISM numbers came out on Thursday and they were down and people were a little bit nervous, and then all of a sudden 312 hit the handle. So really it just demonstrates it was a very, very strong December, November period as far as job creation and retail sales. When those numbers are released, they're going to be extraordinary. I reckon the best over the last couple of decades. So it's really, really strong when you think about manufacturing's under the whip. It only represents about 12% as far as industrial for a GDP, but the consumer represents 70%. And they're really on fire. It's booming in the States.
Because you wonder which print to look at. Obviously, everyone was sort of rattled by that weak manufacturing print recently.
Sure.
And now they've been, you know, kind of taken aback, obviously, by this jobs report. So what do we look at? I mean, what is a forward-leading indicator of the economy?
Well, it's got to be a good sign. And also Jerome Powell, I read in the Financial Times, he's really thinking as far as, you know, the market's ahead of itself in the sense where it's more or less dictating where policy may need to be. And I'm pretty sure that they'll take a very, very close hand and maybe not as bullish or as hawkish as what we thought as far as Fed rate rises. So I feel as though that everything's under control and it could be just the return of the Trump rally. These numbers are really extraordinary. When you think about what's happened, you know, 312,000 job creation and yearly wage, it was the best month, I think, since 2009 as far as hourly wage rise. So it's a big boost for the economy and a very, very confident setting. And
we saw the unemployment rate rising. Initially, I thought, oh, not so great. It rose from 3.7 to 3.9%. But when you take into account the fact that the participation rate rose, that really explains that move in the unemployment rate. I guess overall, it's a good thing, isn't it, that more people are entering the workforce?
Well, they're younger people. They're leaving work. They're leaving universities. They're leaving school, I should say, and they're looking for work. And naturally, that's, you know, part and parcel as far as the economy. They've got a very, very strong you know, when you think about the service sector, it really is. Small business drives America. And we just think that, you know, it's all big, large companies and corporations and manufacturing. Well, it's not. It's the service sector. And that really is the core employer of, you know, domestic America. And really, when you think about it, I'd love to see that copied in Australia.
Yes.
We need to do what America's doing in a lot of ways, and they're booming, absolutely on fire.
I think you made a really great point about the consumer as well, because over the Christmas trading period, it will be so important to find out exactly how consumers have been getting out and spending, and once corporate earnings start flowing through, we will get a better idea of that.
Well, exactly. And, you know, America really did well because Trump came out and said he wants to see lower crude prices, and that put more money in the purses and the wallets, and they spent that over Christmas. And that's been very, very evident. So inflation's under control, more horsepower there from the consumer as far as spending power and being demonstrated, and just, you know, it's just a wonderful time in the sense of what this economy is facing.
Now, Peter, you brought up the Fed Chairman Jerome Powell. We were all looking ahead on Friday to his speech on Friday night, actually, as to whether we would see any changes. Overall, it seemed like he was suggesting that they would be more flexible regarding their future policy decisions, and also sort of indicating that they are taking note of what's going on in markets. Was there much of a change, though, in his language and his rhetoric on Friday?
I think it's more or less just it satisfies the market. It puts people at peace, and they, you know, this as far as trading and you know, the instos and all of the commercial side as far as, you know, traders on the market. And that satisfies a lot of people's hearts because they just take a better feel in themselves and go, well, righto, this is where the Fed chair's at. We're not too hawkish. We're taking a more centred approach, and that really does create a sense of more, I believe, stability from the Fed, and people are a little bit more, well, this is where we're at. We've got mortgage rates at nearly very, very low numbers in the States, housing strong, and this is all a very, you know, again, more potential to create more growth over the next, you know, 3 to 6 months.
This week as well will be really important in the US because we have those Fed minutes, and I suppose we will get a better idea as well about how they're thinking and what's going on. What do you think you'll be watching this week? Obviously, we've got the US government shutdown, which looks like it will be continuing as well in the week ahead. Is that having much of an impact on markets right now?
Well, it's having a big impact on people coming back to work. It represents, I think, about 33% of those federal jobs. But the which probably does put a little bit of a from a confidence side, it's unsettling.
Yes.
But I think President Trump, he may take... he's still pushing hard. He believes the Democrats will come to the party as far as the wall. Let's just wait and see what happens there. I think I'm going to certainly look at the numbers coming out as far as Germany, France and UK. They're weaker than what we expected, Germany and France.
Yep.
So that's going to be a little bit of a handbrake, and that could really cause further concern to the Eurozone. Let's just see how the week pans out.
Yeah.
It'll be an interesting one.
It certainly will be. Fed minutes and I think CPI as well in the US, obviously being so data dependent at the moment. I think the CPI will be especially important this week. So that's a couple of things that we are watching. Of course, the US-China trade talks as well. One of the big factors why we saw that rally on Friday as well was because of these vice ministerial level trade talks that we're expecting.
Right.
I think they're kicking off today, actually. This, no doubt, will provide a lot of direction and could certainly dictate trade as we kick off this new week.
I think so, and which is a good thing. You know, these large corporations, and of course, let's just put the matter to bed. And that's what I think that's what President Trump wants to do, and certainly the Chinese do. The Chinese economy is certainly, you know, the heat's out of it, and they need to take a very centred approach as far as what they want to achieve here. Yeah. They've capital adequacies as far as their banks. They trimmed that down, I think, around about. I think the number was either 170 billion or 470 billion as far as what it actually assists their from the capital adequacies for their financial institutions in China. So all of that needs to be a little bit seen as a stimulus, and I think it's going to be a very interesting lead up. And don't forget the other side, which is, you know, this time next week we've got Westminster and what happens as far as Brexit. So it's going to be a fascinating 7 days.
Yes.
And what impact globally that represents to the markets.
Yeah, absolutely. Certainly calming of those fears, and not just because of those trade talks, solid data as well on the services sector in China.
Yep.
And yeah, of course, that's sort of helping out commodities as well. A lot of market watchers have been talking about the oil price. I think it had a bounce for its 5th day in a row. And a lot of market watchers have sort of been talking about the stabilisation in the oil prices being one factor supporting equity markets towards the end of last week.
Seen as a plus.
And it looks like it's going to be a positive, certainly for those mining stocks as well, particularly because commodities are, you know, really acting as that proxy towards China.
You bet. You know, when you're seeing metal prices, they were bid down and now they're coming back up. Copper's having a little bit of a, you know, fun time in the sun. Certainly the crude market was oversold in a lot of ways from the production side. So let's just see, you know, I think there's still wonderful trading opportunities. The US dollar's still holding at about that 96.2 for the US dollar index. Currencies are fluctuating. We're back up at around about that 71 level. We were bid down last week and now we're back up. So it just demonstrates, and as we said, you know, just before Christmas we were talking and we said, you know, there's going to be volatility. Well, it's certainly volatile. Because some days it's up 3 or 4% and other days it's down 6%. So I don't think that's necessarily going to change over the month of January. And this week, what are you expecting? I mean, it looks like we're in for a pretty solid start. It's going to be a great start. Futures are up over 1%. But have a look at Tokyo. It was bid down on Friday. I think that'll bounce today. I think it'll be a bit of a return. It's back under 20,000. So let's see if we get some movement there. I hope that we see a positive, you know, next couple of days. But you know, you just don't know what can happen tonight in the States. I mean, it was up so dramatically. Apple's up. All the tech stocks are up. Let's see if it continues. Only the market knows, Leanne, and no one can really guess where it's going to go. I think that's a great point that you make, though, to watch Asia, watch Tokyo in particular, because there certainly could be more position adjustments after that big move that we were watching in the yen Europe
last
tonight,
week.
Because Europe's going to be very important. We'll come on board around about 5 o'clock. We'll be talking to our team there, and I think that there's a very big chance that that could see a little bit of a, you know, a bit of a push up from those numbers coming out of America, you know, Friday night. All right, fantastic. Look, all boding pretty well for our local session there today. Hope so. Fingers crossed. Really appreciate you joining us this morning, Peter. Thank you so much. Thank you, Leanne. That was Peter McGuire from XM joining us there.